commentary for January 3rd, 2020. Happy new decade, by the way. Hope everyone had a very Merry Christmas and a very happy new year. Based on that, let's just look and see what commodities did during 2019 in a rough comparison. Corn was up about 3.5% year to year. Beans up about 7%, led by soybean oil up 25% year to date. For the year, I should say. Wheat up 11%. Cattle market virtually unchanged. Hogs up 16%. Energies, the crude oil up 33% on the year. Natural gas was the big loser, down nearly 27% for 2019. Gold, both up in the teens percentage-wise. S&P 500 had a big up year, up nearly 29% on the year. Dollar index closed the year almost unchanged. And interesting to note, going back for the last decade, going back to the close in 2009, grains are actually a little bit lower than where they were to start the decade. Keep in mind we're coming off that big bull market late in 2008 and so on. Cattle market's up a bunch. Cattle market back in that time, was around $86 versus the current value around $125. Crude oil is lower. In general, the commodity market is down quite a bit from late in 2009. Stock market on the other side, which is coming out of the Great Recession back in that time frame, it's up almost 3 times in the decade. S&P was 1,110 and closed this year at 3222. So very, very impressive in that regard. So gives you a quick rundown of what history has told us, and we'll see going forward. As far as this week's concerned, kind of a choppy, positive week early in the week. End of year money flows. Early in the year, looked like some money flow coming into commodities, which some analysts are looking for. And then we had a little black swan event Thursday evening with the U.S. Taking out the Iranian military leader Soleimani, if I'm saying that correctly, thus adding quite a bit of global tension in the Middle East. The stock market took a pretty good hit off that news, and nearly all the commodities did, other than the energies, which were up basically $2 or so on the crude. Now keep in mind the United States is the largest producer of petroleum in the world now. If we go back 10 or especially 20 years, that wasn't the case. So any conflicts in the Mideast tend not to have as much impact on the markets as they would have had back in that time frame. But the market's a little fearful going into the weekend if we'll see any retaliation, et cetera, et cetera. So that is an added factor to the markets going forward. Now, prior to that, the tendency was to focus on Phase 1 trade agreement, which still is anticipated to be signed in the White House on January the 15th, which is a week from this coming Wednesday. A week from today, January 10th, it's a pretty big day also. As far as the USDA is concerned, it's the final production number for the 2019 crop, both yield and acres. It's also the quarterly stocks report, and also a supply and demand update. So a week from today, we'll get a lot of information. Most are anticipating the market to be firm going into that report based on the anticipation of slightly or some decreases potentially in yield, especially. One other caveat on that going forward, though, is with latest updates out of South America in regards to production. One private firm came out today and talked about Brazil having a production number on beans this year potentially 125.9 million, which I believe would be a new record by like 5 million metric ton. Also a good crop in Argentina. The South American crop's off to a very good start. Long ways from being done, but at this point is at a very good spot. Cash markets in the past week have been spotty because of the holidays. General, fairly firm on both the corn and beans. We have seen some ebb and flow based on movement out of the Gulf. Obviously, the Mid-Miss is closed now, so we're kind of limited on that. We did have export sales today for the week. Disappointing on the wheat, the corn, and the beans. Corn continues to struggle year to date. We're over 40% behind last year's pace, and nearly half the corn so far has been taken by Mexico. If it wasn't for Mexico, this corn export number would be much worse. But going forward, again, a week from today is a January crop report. That's going to give the market a little more some vision on what this market may look like going into latter spring. The last several years, corn market especially has been very flat during that time frame. As we've seen, the market hasn't spent much time above $4 over the last 5 years during that time frame, but at the same point, not a lot of time below, say, 375 to 380. So the market at this point seems fairly range bound. The bean market can tend to have a little more volatility because of the potential demand with China. Again, the signing is on the 15th. We'll see if that spawns any new business. If you have any questions with any of these markets, feel free to give us a call at BIS Commodities in Cedar Rapids. Phone number is 800-373-2525, or catch us on the web at biscommodities.com. With that, we wish everyone a great weekend and a prosperous 2020.